The outlook for emerging markets has deteriorated very sharply over the past 2 years. There's been a recent improvement in the appetite towards emerging markets. But if you look at MB spreads, the JP Morgan index for emerging markets is still around 8%, which is much higher than the roughly 5% levels of a couple of years ago. The key reason why there has been such a deterioration for the outlook for emerging markets is the rapid rise in public debt. The IMF estimates that the most recent debt to GDP figure on average in emerging markets is around 65% of GDP. That's 2022. This is 15 percentage points of GDP higher than 5 years ago. And if you look at IMF projections, this 65% of GDP number is expected to grow to around 75 to 80% of GDP in 5 years. So that's about a 25% of GDP increase over the past 10 years. For emerging markets that are not hard currency issuers, this is a serious risk in terms of market financing when global interest rates are going to be higher than they were before.
Yes. I mean, I get the sense, Reza, that emerging economies that have been at the sharp end have some breathing space now because it seems that the uptrend in the rates market and in the dollar appears to have broken. So that's giving them some room to maneuver. They need to spend that time wisely. Clearly, to what degree have they made progress in terms of long-term debt sustainability and a program and a plan?
Look, I think the theme is going to be divergence as some risk appetite returns to emerging markets. Those that had made progress in tightening monetary policy earlier to bring inflation down, those that have a good track record of macroeconomic policy implementation are going to be rewarded by investors. But there are many that have high debt, that don't have a good track record of macroeconomic management, and they are going to continue to face challenges because the world funding rates are still much higher than they were 5 years ago. So when you have high debt and you have high funding rates, when risk appetite returns, it typically goes first to those countries with good fundamentals. You see in the region, for instance, Thailand, you see Indonesia, you see Philippines, all doing considerably well. But on the other hand, many countries in sub-Saharan Africa, they are currently facing yields on their Eurobonds of more than 10%. And for many countries, yields in excess of 10% in hard currency is not sustainable levels.